We start today's market talk. Risk assets are much more vulnerable to bad news than good. The baseline case for all economies is soft landing, but that is already priced in. What is not priced in is the bad news, which is unexpected and which erupts out of the blue. Right now, the cash with fund managers is low as they are bullish on equities. The bet on rate cuts is over, at least as of now, for calendar year 24 because of persistent US inflation. Upside inflationary surprises driven by commodity price spikes, supply chain disruptions are being ignored. So, a benign disinflation narrative is prevalent in equities. Hence, in the present environment, the equities are pricing in all the good news, while the bad news is not priced, hence, they are more vulnerable to bad news. Market outlook. Geopolitical uncertainty came back. Only reason Biden is trying to deter Israel from retaliating is due to US elections. Uh, Middle East tensions provide lessons for two other conflicts also, which are prevalent in the world: Ukraine and South China Sea. There is an urgent need to hold talks to de escalate these conflicts because global growth has slowed down considerably. Combined with high interest rates, it would put debt sustainability at risk for most of the economies because they have borrowed a lot post COVID and the interest rates are still high. Escalation in Middle East is a reminder of big geopolitical risks which are being faced by all riskier sectors. Fed Chief Jerome Powell hinted again that interest rates may need to be higher for longer given stubborn last mile inflation. Persistent indication of sticky inflation have made the Fed chief's aspirations of doing three rate cuts this year all but a distant dream. Fed has raised interest rates from 0 to 5.5 in a year. Instead of moving towards 2%, inflation in US is ticking upwards. Markets are now only expecting Fed to deliver 25 to 50 basis point of rate cut in calendar year 24. US 10-year Treasury yields have risen from 4.2 in March to 4.6. If US yields go up further, FI sell-off could be in the horizon for Indian equities. Volatility is too low compared with elevated levels of macroeconomic and geopolitical uncertainty. Volatility has declined to multi-year lows for most asset classes on optimism that global rate hiking cycle is near its end. With global economy being resilient, uh, the volatility is not coming down. Volatility risk premiums are now at levels seen just before the start of rate tightening cycle in 2022. High valuations of Indian markets and its vulnerability to high crude and commodity prices make it susceptible to shocks, but these have been cushioned by domestic fund flows. We are getting roughly 20,000 crore in form of SIP, while there are other inputs in terms of flows which are coming uh, from NPS, from insurance amount, from EPFO, etc. Which so total is roughly around a lakh crore, which are cushioning the fall or the selling by FIs. Uh, Indian investors' optimism was constrained in March after SEBI's chief's comments on potential bubble in small and mid-cap space. So flows slowed down in March in these spaces but have moved into large cap, and hence the large cap stocks rallied. So if FI support is reduced, we will have to observe the domestic flows carefully because in case they slow down, then the equities become vulnerable to sell-off. Gold prices are rallying hard. Biggest tail risk for equities are inflation and geopolitics. So it's no surprise that gold prices are rallying hard. Investors turn to gold when they are worried about stability and status quo. It breaks out when world is at a major pivot point. Now coming to Infosys, despite a weak quarter and tepid guidance, the order books booking make us optimistic about a gradual revival in FY25, especially if the discretionary spending environment looks up. Infosys had a weak quarterly numbers for revenue, margins, and guidance. Revenue declined 2.1% and 2.2% in constant currency terms. Weakness in key markets of North America and key verticals of BFSI, etc., have been observed. 20.7% operating margins in FY24 and 20 to 22% is expected in FY25. Total deal wins in FY24 at $17.7 billion with 8 mega and 52% net new deals is very encouraging. In fact, in Q4 only, they have won 4.45 billion of dollars of deal wins. FY26 expected EPS is 75, so it is right now below 20 times FY26 expected earning. Hence, the downside is limited because of the recent fall in stock price. Indigo's market share in India remained steady at around 60% in January-March 24. Indigo maintained market share despite grounding of aircraft due to engine issues. It expects passenger carrying capacity to rise at least 10% in FY25, and it is having plans to add one aircraft per week in FY25. Nestle excess sugar in baby food products in India is a concern. Cerelac contains excessive sugar in developing countries such as India. This led to correction in the stock price, and the stock is now, I'll show you later, is coming down to its, you see here, the stock has corrected and has come down to 2410 level. That is the 200 EM. So if it is taken support here for 2 days, let's see how it progresses from here. If it corrects a little bit more, then it may head to around 2000 level. This is based on the regulatory actions, what will take place with the stock. Coming to technical issues, based on the inflation footprint in the US 10-year yields have reached 4.6. They rose last week and now are trading clearly above the 20 and 50 EMA. The dollar index is again moved up and has reached 106.1 level. It has broken above the declining trend line and is now projected to go higher. So we'll have to watch this. If the dollar index goes up, it leads to correction in equities, especially of the emerging markets and commodities. Brent crude prices have broken above the declining trend line, and it had reached around 92 level. Now, with the lowering of tension between Israel and Iran, the price is corrected, but it remains on tenterhook, so it has to be watched right now. Right now, it is in bullish phase. Gold is heading higher. It has reached $2,400 to an ounce level, and it is going up. The rise is basically because of central bank buying and the geopolitical uncertainty. But if the dollar index is also going up, then the gold also simultaneously going up is not correct. So something will correct from here. Nasdaq 100, it corrected and has come below on the weekly chart 20 EMA. It's corrected because of its major constituents are correcting, and the possibility of early rate cuts in the US have been reduced. S&P 500 is a weekly chart. It has come below 5,000 level. So it had worst weekly performance in a year. Index has slipped below 5,000 levels. Strong economic data in the US, hawkish Fed have made people realize that Fed is in no rush to ease monetary policy, and because of which all the rate sensitives are correct. India's 10-year yield is also rising along with the US yield. It has reached the 7.22 level. So need to watch this space. It can go up to 7.3 because on this declining trend line, but then it should correct from there. India VIX went up. This is a daily chart. So it had gone to around 11 odd level and then it has reached a 13 level. This is because of volatility, but it is, if you see here, it is still trading much below the earlier levels, which was expected. It has corrected a bit from that 15, 16 odd levels, had corrected to around 10 level. The lower levels are only indicating basically complacency. This is Nifty 50. Now, the point to note here is when the Nifty corrects, it corrects by two swing lows. So the last swing was at this 21,710 level, and then the next swing was 21,200. So these are the next two supports. On This is a weekly chart. So on Friday, Nifty went down to these levels, but then bounced back from there. So it has yet to test this level. Now, if you see very carefully, it is making a higher high and higher low. So till the time this 21,710 level is protected, that trend of higher high and higher low will be followed. Hence, it will remain in a bullish trend. And if you see here, it took support at this 21,752 odd level, which is the 20 EMA, 20 EMA on the weekly chart. So watch for these levels. Now on the daily chart for Nifty, if you see here, it broke the 20 EMA, then it broke the 50 EMA last week and was heading downwards. Then it bounced back, probably by short covering and movement in HDFC Bank. So it has gone above that. So it is at a critical level. So we have to watch these levels, but it remains vulnerable to lower levels. Uh, this is the hourly chart. So if you see here, after the gap down on 19th, that is Friday, Nifty went up and has reached the 20 EMA on the hourly chart. But till the time it is trading below the 50 EMA, it is weak. So for strength, it has to go above 22,300 levels. So then for short term, it will be in strength. Otherwise, below this 20 and 50 EMA, it will remain vulnerable to sell off. So watch for these levels. This is the Nifty option chain data. So if you can see here, the maximum call writing is at 22,300 and 22,500. So they should pose as resistances. And the maximum put writing is at 22,000 level and 21,800 level. So these should provide the supports. So over the next few days, I think Nifty is going to remain between this 22,000 and 22,300 levels uh, in terms of till expiry. Reliance had a positive week. It took support at the lower level of around 2,900 and bounced back from there. So till the time it is trading above this 2,850 and 2,900 levels, it remains positive. It will have results on Monday, which should be good. And I think up to 3,000, most of the results are in the price. Bharti Airtel, it had a positive week, basically due to the strength uh, in its stock and earnings. In addition, there is an expectation of a tariff hike post elections. So the stock was up last week and is now made a fresh all-time high of 1296. So that is roughly 1,300 levels. So it is expected to do well from here and it is in momentum. Bajaj Finance, it was weak, made a red candle, tested the 100 EMA at around 6,820 this week and bounced back from there. So watch for this level, but this is the stock to be bought on dips. It is making lower highs and lower lows. So it's in a downtrend. Hence, it has to be bought at major supports only at around 6,100 odd. Nifty metals continue to perform well. though it had made a kind of doji indecisive pattern. But depending on the geopolitics and the other issues, it can move anywhere. It was moving up because of various issues with specific metals, metal stocks, but we'll have to watch them carefully. Now, Vedanta was going up and it has had a positive week. It has gone to roughly around 400 odd level from the 270 odd level. So that is a good rise over last 3 weeks. This is going up because Hindustan Zinc is the major producer of silver in India, and silver prices are going up. Right now, it is overbought, so you must trade with caution in this stock. Tata Steel made a doji pattern. It had gone to 170 and has corrected. Now it is consolidating at 160 odd levels. So just keep in mind where it goes. It can go in any direction from here. It can go and test the support at this 146 odd level, or can go and make a fresh high, depending on the news related to steel stocks. Hind copper, it was consolidating between the 360 to 365 levels. Uh, it is making it was in FNO ban, hence it could not make fresh highs, though there is a reduction in supply all over the world. So the corporate prices had gone up. So this week, I think it is going to come out of FNO ban. So watch this stock, where it to what levels it goes. It has moved in these range now, so it can go higher once it comes out of FNO ban. But the point is that within 1 or 2 days, it will go back again into FNO ban. So this has to be considered. Nifty Bank, similar to Nifty, these are the last two swing lows. So these should get at least the second swing low should get protected of around 44,500 odd. Uh, it it corrected and it had gone below the 20 EMA, but it had bounced back. It had made a fresh high. Now, if you see the pattern here, it was making lower highs, but then it had make a fresh high. So that pattern was broken. So now if it doesn't break below this uh, first swing low, then it should perform well from here. Uh, just watch for this 40. This I think is 45,800 level. So this should be the critical level for Nifty Bank. Is a daily chart. It made a fresh all-time high of 49,000 plus, and then it has corrected. It first broke the 20 EMA, then 50 EMA, and then tested the 100 EMA and took support there and bounced back. Now, basically on Friday, because this big green candle was because of HDFC Bank, it took the Nifty and Bank Nifty up. But with this performance, it should correct from here. HDFC Bank, uh, let's see the chart. This was the high at 1722, and then it made a bottom at 1363 based on results. It had retraced up to around 50% of the fall, but after that it was consolidating. Uh, it had moved up above from the 50 EMA to around 200-day moving average to around 1530 odd. But after that, it has stuck there. So after these results, I think it should correct. So probably it will trade between this 1450 and 1550 levels over the next quarter or so. And then we'll see further how the business performance improves. ICICI Bank is a daily chart. It corrected and it has broken the 50 EMA. So broken and then retraced back upwards. So this has to be watched on all weaknesses. This can be purchased up to this 100 EMA level of 1037 odd. PSU banks, it had a negative week, made a red candle, opened gap down, and was consolidating. This is consolidating because expectations are of slightly weak results from all the PSU banks. SBI corrected, made a red candle, and so all this level closer to 700 should be a decent buying opportunities. It failed to take out the previous high of around 800 odd. Canara Bank, it corrected There's a daily chart came to its 50 EMA from where it has been bouncing and has bounced back. There's a split which is taking place next week, so which should keep this stock excited. But up to 50 EMA is a good level to accumulate this stock. PSE index continues to do well, basically because the PSEs are expected to perform well post elections. Fresh order and the political continuity will favor them. Uh, One of the strong stocks was Bharat Dynamics, basically because of their missile defense capabilities and all that. Though the results are expected to be weak, so don't chase this stock because the business updates was weak. Anything which is closer to 20 EMA, 1650 or levels on the weekly charts is a decent opportunity to get into this stock for long term. Power grid, because of the number of power projects and the interest in transmission, is was going up. It is reaching the 290 odd levels. It is headed higher. So watch for the performance of this stock from here. It can easily go to 300 and 300 plus levels. IT index was weak. It it is in a declining trend line, and on the weekly chart, it has broken the 50 EMA, and it is headed lower because the performance of two of the big wigs are not good. This is Nifty and TCS. So next level of support should be this 100 EMA, which is at 31,850 odd levels, where it can whether we'll see the tech support there or then it can go down further to the 200 EMA. So it becomes very vulnerable to selling. Now, among the IT stocks, Infosys was decent. It was looking good, but then it corrected based on results. So this weekly chart, it tested the 200 EMA at 1372 and bounced back from there. Um, right now, it it is just above the uh, it has to trade above this rising trend line for some strength. Otherwise, it will remain range bound in this level of 1370 and 1430, 40 odd levels. So mm, watch out for this stock. The stock which is having a declining trend line is persistent systems. Now it has risen up a lot. This is post split. This is after the split also, and dividend the stock is corrected, and it remains very vulnerable because it was performing very well. So if the results are weak, it can easily correct to the 200-day moving averages, which is around 3450. Um, very sharply because a lot of people are long on these stocks. Nifty Auto Index again consolidated, made a doji. So right now it is looking for directions, which direction to go, and the results. Mahindra and Mahindra was positive. It went to uh, it went to around 2000 plus levels. It had corrected, but bounced back from the 20 EMA at around 1995 and has gone to that fresh levels of 2082. So we'll have to see from here. The last high was 2100, so it may test that, and the results are expected to be good for most auto stocks. Nifty Energy Index is also doing well. Most of the stocks in this space are expected to do well over the future. Hence, there's a lot of interest and reflected in the chart. It has moved up very nicely over the last 1 year or so, and nearly index has nearly doubled. One of the stock here which are performing well is NTPC. It corrected a bit last week, but if it comes to this lower levels around 320 odd, that is an opportunity to grab this stock because this is where it generally takes support once it corrects around 20 EMA. Nifty Infra is doing well, so it should perform well from here. And basically, the constituents of Nifty Infra, LNT, it is correcting basically because there is an expectation that business will be slightly slow in Middle East on the various contracts which it has been accorded. But all the weakness in this stock is a good opportunity to accumulate this stock up first at 100 EMA and then at 200 EMA. The 100 EMA comes to around 3451 and the 200 EMA will come to around 317 5 levels. So watch out for these levels. Use the weakness to accumulate the stock. The mid-cap index corrected. It was weak because of basic weakness in the market, so it sold off. But somewhere closer to the 20 EMA, it should again regain strength, because if you see the trend, it has always is not traded below the 20 EMA over the last year or so. Similarly, small cap index, it seems to have recovered. It made a fresh high. Last week was kind of consolidation, but still it made a green candle last week, so it should do well. The stock which was in news because of the FPO is Vodafone Idea. The divergent views. So the stock is stuck between this 12.5, which is the 200 EMA, and the 13.5, which is the higher range. In this level, it was trading between that. So basically, it should move on the success of the FPO from here, uh, the direction it will take. Indus Stars, this was one stock which was in good momentum last week. This was doing well because there is expectation that in case the Vodafone gets revived, then the Indus Stars uh, provision which they have done for all the revenue which they're supposed to get from Vodafone, it will get reversed. So they have already provisioned that, so that will get reversed and it will help their profits and subsequent performance, because the performance will also improve once the towers are lending out to two users other than one. So this stock performed very well. It has been performing well over the last month or so, and it has moved up from the 220 odd levels to around now 350 odd levels. There are estimates which it is saying that they are expected to go much higher from here. Now I'll cover three stocks today. The first is Zen Technology. It's a leading company engaged in designing, manufacturing, and developing land-based military training simulators, driving simulators, live range equipment, and anti-drone systems. It has its own training platform to provide a realistic battle experience by integrating its entire range of product offerings. The company has applied for over 150 plus patents, and it has shipped more than 1,000 training systems around the world. Its demonstration center at Abu Dhabi is progressing as per plans and will be operational soon. Company will also focus on products that use artificial intelligence to ramp up its product portfolio. Its order book stands at around 1,434 crores as of December 31st, 23. Simulator products at 634 crores and training simulators and equipment at 800 crores. The book-to-bill stands at 3.6 times TTM sales FY23. It has a strong position in the anti-drone systems market, with most competitors relying on imported products, while the company is fully utilizing its manufacturing capacity for anti-drone systems and has a network of vendors for manufacturing. Supply of simulators carry a warranty period of 36 months. That means after 3 years, it starts earning. They receive 10% of order value as AMC per year. So after this expiry of warranty period of 36 months, and the simulators actually last up to around 15 years. So roughly they make 120% of the cost. That is a lifetime earning from the basic cost of the simulators over 15 years. Addressable market is around 15,000 crore for armed forces training simulators. Let's see their financial summary. So if you see here, this is in crores. So they had Q and Q, they year on year for quarter 3, they did 89% higher income. And Q and Q, it was 49.6%. And if you see here, uh, FY23, they made around 218 crore, it nearly doubled to 416 and nearly doubled from there in FY25. So it is expected to go up another 25% from there in FY26. Similarly, the movement is there in EBITDA and other issues, and PAT also. EPS is expected from 5 rupees in FY25 is expected to be around 13.5 in FY24 and around 25 rupees in FY25 and 30 31 rupees in FY26. ROE is expected to be better, and from 30 it is going up to 41 to 34 expected in FY26, and PE is come down because of better earnings and EV EBITDA also. Let's see their order book size. Every quarter it is improving. So in Q3 and it was 1434 crores. The key orders they have got are anti-drone system, export market, training equipment for MOD, etc., simulators, export order, and training equipment for MOD, various amounts. This is their balance sheet. It's got no debt, so that way it is good. Share capital is around 8.4 CR. So right now they have adequate amount of cash and cash equivalent, so there is no need for any for fundraising, etc. So which will dilute the equity. So the balance sheet is strong. Uh, EBITDA margins are roughly around 30-35% and improving. Uh, Similarly with EBIT margins, PAT, ROE, ROCE, etc. Debt to equity is negative, so that means they have no debt. EPS is improving. They pay dividend, so around 2 rupees is 1.5 to 2 rupees expected around FY25-26. Debtor days are generally reducing, inventory days are reducing, PE is going down, so things are generally good for them. Hence, they're expected to company which is growing roughly 40% in terms of revenue and profits is expected to be valued at 45 to 50, at least at the lower level in terms of PE. This is their chart. So if you see here, uh, it bounced up in August, September odd, went to around 800 odd level. Then it consolidated and now it has again gone up to 1000 odd level. Their success rate in winning orders is 80% in the various orders because of their strong technological background. They said that they will do around 900 crore revenue in FY25 with an EPS of 25 in rupees 25 in FY25. So that comes to around 40p as on date. They are establishing a R&D and manufacturing facility in Goa, India. We discussed about simulator. So the AMCs of simulator, which is a constant source of revenue from there. BSF has already installed anti-drone system in all sensitive points along the border, so that should do well for them. Next stock is Chola Investment. It's a well-run multi-product NBFC model with stable performance over cycles and unblemished track record. Now, it is not like a current NBFC which has just been listed or something like that, running over the last 10-15 years. So stable performance, no corporate governance issue. It has delivered strong growth and stable margins by switching between various asset classes, delivering 24% EPS CAGR over the past 10 years, FY15 to FY24, and average ROE of 19%. So you have this company has gone through at least two business cycles already. Hence, it's a strong pedigree. Expect it to deliver 23% loan book and earnings CAGR over the next 3 years, translating to 19% ROE, which is good. It effectively switched between segments to contain the NIM pressure. So it has not let its NIM go down. It has been agile enough to tackle competitive pressures on yields by growing the used vehicle business. It reported 27% growth in heavy commercial vehicles in 9 months of FY24 versus overall loan growth of 40%. The company will continue to add non-CVs such as used vehicles and two-wheelers in the vehicle business while growing loan against property and business loans rapidly. Let's see their earnings. Net interest income, this is in millions, is expected to be around 10,833 crores in FY25 with AUM of around 1774 billions. So that 1 billion is 100 crore. So it implies 1.7 lakh crore of AUM. Year on year growth is around 20%. NIMs are very going to be strong, around 6.85, which is very good. Uh, rest PAT is growing. ROA is expected to be 2.4, which is good. And EPS is expected to be 49 in FY25 and 59 in FY26. The book value is 277 for FY25 and 350 for FY26. So if you see the book value at 350 for FY26, it is trading below 3 times book value for FY26 right now. So it is relatively now less expensive as compared to earlier. Now, if you see here, these are the three vehicle finances: Chola Mandalam, Mahindra Finance, and Shri Ram Finance. Now, among them, this one has a better AUM mix across vehicle finances. So if you see here, home equity is around 20, cars and MUVs 13, heavy commercial vehicle 4, light commercial vehicle 12, used vehicles, small commercial vehicle, three-wheelers, two-wheelers 6, tractors 4, business loans 20. So it's a well diversified uh, AUM mix as compared to the peers, which are more oriented towards commercial vehicles. Now, see here their ratios. So, operating income is expected to grow at around 20%. Similarly, net interest income, operating expenses, provisions, uh, tax, profit after tax, they are all expected to grow in the same range. Uh, Loans are also improving similarly. So NIMs are expected to be at around 6.8. Cost of borrowing plus yield on loans is roughly stable, so it's not that affected. Uh, the net interest income uh, uh, of this thing exposure is decent. Operating expenses are under control. So ROA is expected to be around 2.4. So if you see the key ratios across segments from year 2011 also, so you see vehicle finance has been going down and home equity is initially was going up and that's going down and they are shifting to other businesses. So that is going up. So if you see here NIMs across expense ratios, provisions, pre-tax, ROE, all are under control and have been doing decent business over the last 10 to 15 years. So they will show 23% CAGR AUM over the next 3 years, and disbursement trends often but remain still high around 19%, so which is good as the base is going up. As the new business ramp up, share of vehicle finance will decline to 57%, and the next higher is home equity, then home loans, and then business loans. Uh, NIMs likely to stabilize at 6.8%, so which is okay. Now let's see the chart. This is an interesting chart. It gets oversold uh, and then it bounces back immediately. And then again, it reaches that oversold levels and then bounces back. So once it got oversold recently in March to around 1000 odd level, it bounced back very quickly to 1220 and then has been sold out. So once it is near this 200 EMA, this is a good levels to accumulate this stock at lower levels because of the inherent volatility which is there in this stock. Uh, NBFCs are benefited due to asset price inflation. So that is a good thing. Even if they are able to do lesser amount of vehicle finance, because of the higher cost of vehicles, they are benefited because all the prices of home loans, oblique vehicles are going up, and there is a migration to used vehicles. They are growing into loan against property and business loans, uh, and the share of course commercial vehicles is declining. The next stock is Zaggle Prepaid. It's a leading SaaS-based spends management and analytics platform. It's offering covers employee reimbursement, tax benefits, rewards, and incentives for channel partners, employees, and vendor payments. It is in the initial phase of its life cycle with multiple legs of growth ahead, like new customer acquisition, increased cross-selling of products to existing customer, global expansion, and new product offering. It has three product offerings: Propel, a corporate SaaS platform for rewards, incentives, and recognition for channel partners, dealers, distributors, retailers, and employees. Save, an employee reimbursement and tax benefit solution. Zoyer, an integrated data-driven business spend management account payable platform. Its spend management system allows for real-time visibility of company spending across departments, aids in risk management, establishes and implements internal controls, and develops expense-related policies operating in an under-penetrated space with global expansion opportunities. It charges nominal fees for the corporates for using its platform. However, it derives bulk of its revenues from redemption of channel and employee rewards in the form of gift vouchers, closed-loop gift cards, or prepaid gift cards. Spends generated by employees on co-branded cards and vendor payments and data analytical solutions. 75% to 80% of net 9-month FY24 revenues are generated from interchange income. Interchange income is basically small percentage of each credit card and debit card purchase amount that is paid to financial institution by merchants for the privilege and convenience of accepting payments via financial institution issued card. So this is their main source of income. Recently, Visa and Zaggle have further strengthened their partnership by jointly issuing Forex co-branded cards. It will capitalize on its existing corporate clientele to distribute Forex cards to employees of these corporate clients, seamlessly integrating this offering with the Zaggle expense management solution. It has also partnered with Bank of Baroda Financial Solutions for implementing commercial cards onboarding and a value-added service platform, Zatix. It has tied up with Easy Trip Planners for API integration for integrated travel and expense management solutions to corporate clients. It has entered into service provider agreements with Axis Bank for bundling of Axis Bank corporate credit cards with Zaggle's corporate base. It has tied up with Torrent Gas for closed-loop fleet loyalty card programs. So let's see their revenue. Their revenue has been growing. So FY24, they expected to around 780 crores and around 1,094 crores in FY25, and similarly growing around 40% over FY26 and FY27. So their revenue is coming from subscription fees, program fees from all three, Save, Propel, and Zoyer, and Propel platform is expected to be providing them revenues. So if you see there, profit, they are profitable. So they would have made around 73 crore profit in FY25 after 45 crore profit in FY24. So the revenue growth is approximately now 30% plus, with gross profit growth at similar 30 to 45%. EBITDA growth is in 50% plus, and PAT growth is again similarly 50% plus. So it is doing well, and a stock which is a company which is growing in terms of revenue at 30% and profit at 50% for at least 3-4 years is always priced at a much higher valuation, that is 50 times plus by the market as on date. This is their profitability. Gross margins are improving. Incentives and programs fees is also going down. EBITDA margins are improving because of that. PAT margins are improving. ROE, ROC are also improving. Valuation. So we have seen their earnings. As per that 6 rupees earnings they are expected to do in FY25. So they are at around 45 times, 45, 46 times right now. And with 8 rupees, they are around 35 times for FY26. So it is relatively cheap valuation as per the growth they are showing. This is their path. They founded in 2011 to simplify corporate spends. Avinash Ramesh Kothkindi joined as MD and CEO in 2012. 2015, they launched the Zaggle app. started focusing on customer loyalty program. 2019, they launched prepaid cards with Indus in bank. Indus in, launched Propel, launched Save. They partnered with Razorpay, with NSDL payments, etc. Uh, Issuance of co-branded prepaid cards, etc. Partnered with Yes Bank for issuance of co-branded prepaid cards as of March 2020, with their customers' strength, etc., growing. Uh, as of March 21, you can see they had 1,000 odd customers and zero point 0.9 million, that is 9 lakh users. Then they have 22, they have launched Sawyer, introduced Zake, building a robust and sustainable SaaS and fintech program. They had around 215 employees, and as of 2023 December, they have 2837 customers and 2.6 million users. So the number of customers are 2837, that is in terms of corporates, and 2.6 million, that is 26 lakh users. So that's a good rate of growth. These are the various clients they are having, which are being provided with Zaggle solutions. So expect around 47% net CAGR growth in terms of revenue for all three: program fees, net propel, gift cards, and platform fees, and 45% CAGR in terms of profit and cash profit. So this is their chart. This is what I wanted to show. It listed in September. Then it went up, made a high to around 389, and then has corrected. So now it has retraced nearly 100% to this 267 level, that is 200 EMA, 100 EMA, sorry. And that should be a decent level to accumulate this stock uh, based on the charts. Though it has a limited trading history, domestic market opportunity is roughly 13,900 crore in FY27. 40% revenue EBITDA PAT CAGR over FY24-27, which is good. Recently launched vendor payment solution Zoyer helps company reduce the time and effort spent on low value add but relevant compliances linked activities. Revenue is basically from subscription fees, that is from corporates for using platform. Program fees, it is from banking partners. They share proportion of intercharge earned on spend using Google, Zaggle cards, and Propel oblique gift card fees, redemption of Propel reward points. So basically, they get it again from the merchants, from the people this thing redeem their reward points. I have covered about interchange, so that is their basically source of revenue. Zaggle spend management solution also offers much more than a corporate credit card. 60% of the revenues come in second half of the financial year. Basically, everybody is looking for expense tracking, policy and compliances, budgeting, and planning analytics. So these are the things which are favoring this company. Right now, they have no competitor which is in all three fields which they are there. But it is not a thing where there is a lot of moat or asset. Anybody with some kind of a software and then networking can get into this field. So, but this is a good stock to hold. I finished. We'll take questions now.